Hello, welcome back to my channel if you are already a subscriber, and if this is your first time coming across my channel, welcome as well. And if you have not subscribed, please subscribe to this channel and help me grow this channel. I really appreciate you for doing that. And also like this video and put your comments in the comment section. And so today I want to discuss the topic renting versus buying a house. So I want us to discuss whether renting is a good option or buying a house is a good or a better option. So I'll be giving my opinion about this topic, and also you can put your own opinion in the comment section and let me know what you think. So of course, depending on your situation, there is no right or wrong in this comparison. So if renting is a better option for you, by all means continue renting. And also if buying a house at this time is a better option for you, by all means do it. So I just want to clear the one of the notion out there that some people thinks that if you are renting it's a waste of money. I don't think there is a I don't in my opinion though, I don't think that is a right statement, because depending on individual's situation, for some people renting is the best option for them. So I'm not going to I'm not of the opinion that if you are renting a house you are wasting money, as many people are saying out there. So let me clarify that before moving on. So yeah, and if your numbers are correct, and depending on your financial situation, and you feel like you are at a point to make that decision to buy a house, by all means do it. It's a good thing. Yeah. So, and also of course, some people thinks that when you buy a house to live in, is an investment. Partly it is correct, and partly it's not correct. What do I mean by that? First of all, I will say that an investment is anything that can potentially generate a financial ROI. Anything that can potentially generate a financial return on your investment. For example, a rental property, because they are different. So if you are buying a house, you have to state whether it's a house where you'll be living in, or a place where you'll be renting out. So I consider a rental property an investment, or a short let stock. So these are investments. But the house that you are buying to live in and you'll be paying mortgage on, in my opinion, is not an investment. So yeah, so let me know what you think in the comment section, if I'm right or wrong, and let me know your opinion as well. So if I buy a house and I'm living in that house, and the house is categorized as a residential property where I'm living in, and pay mortgage in. So that house is my primary place of residence. So for me, I don't think that is an investment. I will, come to that later in this video. So yeah, that's just because, of course, it is very important for you to note that not everything has to be justified as an investment. So some things are better classified as luxury, and that's okay. Of course, buying a house versus renting, because you might decide buying a house, I will consider it as a luxury instead of investment. Or you are buying a car. These are good things, you know. You you register you sign on to a yoga class or a gym membership. So these are luxuries, things that you pay for your convenience and enjoyment. So some things are better classified as luxury instead of investment. So it's very important that you uh, categorize those two things. Luxury, is this a luxury or is this an investment? And of course, if you want to buy a house, uh, do well to run the numbers before buying, because you're about to make a very, very huge investment, or you're about to make a very huge purchase expenditure. So buying a house is expensive. So it's not something that you just uh, stand up and go and sign the contract. You have to run the numbers and see uh, whether you are capable to do that or not. Of course, before you make that big decision, do a quick affordability check by attaching numbers to each of the expenses that will come alongside buying that house. So yeah, so that being said, like I said, this video is I want us to look at the comparison between renting and buying a house. So I will start by renting, right? So of course, before I go into the comparison, uh, research and experts are saying that housing of all kinds is in short supply. Yeah, of course, the U.S. is in need of uh, a lot of houses to be built, you know, due to the rising population. So there's still a need for more houses to be built. So, and one of the biggest reasons is that construction of new homes fell sharply during the Great Recession and also during COVID. Of course, during those times, especially COVID recently, right? So, due to the lockdown and everything, so houses were not being built at that time. So it also contributed to the reason why we are in short supply of houses today. So, and of course, we know that immigrants, play a big role in the construction industry. We know that immigrants make up a significant portion of the construction labor force. So, and of course, the Trump's administration in the new term is contemplating of deporting a lot of immigrants. So, of course, we know that this is going to have a significant impact on the construction industry. Removing them en masse is going to cripple the industry. So what does that mean? So of course, this means mass deportation will make the housing crisis even worse than it is today. So a lot of, of course, the labor force, the labor will become expensive. So it's going to be more expensive to build these houses. And that cost, a lot of those that cost will be transferred to the new home buyers. So let's take note of that. So let's go into renting, right? So of course, when you're renting, there is the flexibility that comes with renting. Of course, it is easier to relocate. Let's say you have a job offer, in another city. It is easier for, if you are renting, to break that lease, or not to renew that lease, and then you terminate the lease and you relocate. So let's say, for example, like I said earlier, right? So you have a new job in a new city. So because renting, mostly the agreement is between 6 months to 12 months. So within a short time, you can, terminate that contract and move to a new location. It comes with flexibility. So, and also, there is lower initial costs when you are renting. So if you are renting, right, if you are renting an apartment, I think the initial cost that you will need to worry about is, let's say, the deposit upfront deposits, and depending on the rental property, some renters may require you to put down 1 month of rent as a deposit, of which you are going to get back once your lease is over. So the initial cost is lower when you are renting. So, and of course, also the monthly rent as well. Renting, the monthly rent versus the mortgage. So most people's rent is less, very less. It's lower than compared to those who are paying mortgage. So that's a plus right there for renting. And of course, there's maintenance, right? So there's no maintenance responsibilities for the renter, because landlords typically handle the repairs and the maintenance. So, for example, as a tenant, you can, easily call your landlord to fix, let's say, a leaky roof, a leaky roof, or if a pipe is leaking in your apartment, you can just pick the phone and call the maintenance or call the landlord, and they will just come and fix it. And that cost will be covered by the landlord and not you that is renting. So that's a big plus right there for renting. Another point to consider again is no property tax. So, of course, renters do not pay property taxes, and that's a big plus. So it is the owner of the property that takes care of the property, of the taxes associated with that property, and that's a big plus for you and more money in your pocket. Of course, the utilities will be covered by you that is renting. So renters, you only cover the utilities, and that's it. And yeah, so that's it. I consider that as a plus. So no property taxes if you are renting. The downside that I see in renting is the limitation in customization. So as a tenant, of course, tenants usually cannot make significant changes to the property. Let's say, you know, you you don't like the paint on the wall, or you don't like the cabinet, or the cabinet is too old. You want a newer, modern uh, cabinet. You don't have that flexibility to make that change, or to repaint the wall or anything. So because that's not your property, right? So that's one of the downside that I see in renting. Another downside is, as we see, as the year goes by, we are beginning to see rent increases. So monthly rents may increase with lease renewals, especially when you're about to renew your lease. So uh, it's something to take note of. So, and people are already seeing increases in their rent during renewing the time to renew their lease. So that's a downside I see there. And of course, there is no equity building when you are renting. So I think that's where people that's I think that's the point that made people think that, okay, if you are renting, you are throwing away money. So because you are not building equity when you are renting. So of course, the rent payments do not contribute to ownership or equity in the property. So when you pay rent, uh, let's say a renter pays $20,000 over 2 years for renting. Of course, that $20,000 doesn't go into anything. It doesn't go into equity. You're just paying to live in that property. So the equity of that property goes to the owner of the property. Yeah, of course, insurance costs, right? So renters insurance is cheaper compared to homeowners insurance. So most renter insurance, you see them ranging between $10 to $15. So that's nothing compared to what homeowners are paying in insurance. Of course, credit requirements. The last point I will talk about on renting is the credit requirements. Of course, there's lower credit score requirement compared to a mortgage. So if you are planning to buy a house, of course, the mortgage, which is the bank, the mortgage lender typically runs a credit check, a credit background. So they will check to see your credit score. So, but with renting, there's less, in fact, there's less impact on your credit score when they check, when they do the background check. So, of course, a person with a credit score of 600 is still able to rent a home, or rent an apartment. Whereas that credit score, such a person will struggle to secure a mortgage with that credit score. So those are the ups and the downs when it comes to renting. And if there is any point that I miss, you can also put that in the comment section. Yeah, thank you for staying with me up to this point. So yeah, let's go to buying. If you are at the point of buying and you want to, you've run the numbers, and you feel that it's a better option for you to get on a mortgage and buy that property, congratulations to you. It's also a good thing. to buy as well. So, but however, like I said earlier, you are if that property is going to be your residential place, in my opinion, I don't think that is an investment because, like I said, an investment is anything that can potentially generate a financial ROI. And as we look into a few points shortly, I don't think that uh, if you get on a mortgage, that is an investment because of some reasons that I will mention shortly. When you buy a house, the upside, right? So it provides a long-term living situation and stability. Of course, when you buy a house, you plan to live there for a long period of time. Uh, if you are married and you have family, you can start raising your family, and as a of course, it gives you uh, space, enough space to, to raise your family, raise the kid, and even have family events and so on. So stability comes with it, because if a family buys, a house in a good school district, of course you are thinking about uh, your mm, your kids, the school that your kids will go to, the district, the location of the property. Of course, buying a house, location is very, very important. So you are looking at the schools, you are looking at all the amenities within that environment. So that's a long term thing, and also, of course, it comes with the of course, stability is one key here that I must mention. Uh, the downside with a house is the higher initial cost. Higher initial cost. Of course, buying a house requires a high down payment most times. So it requires you to have a down payment, the closing costs, and other upfront expenses that comes along with it. Let's say, for example, a couple buys a $300,000 home with a 20% down payment. So that will be $60,000. Or you are putting down 5% down payment. That would be $15,000. So that is huge. You know, it requires you to save and come out with this huge amount of money for down payment. So that is one side, one downside, I think, to buying a house versus renting. The initial costs typically is high, because when you are renting, you just need to put down the, let's say, 1 month worth of rent as your down payment. So closing costs, can range anywhere between $10,000 to $20,000. So that's a lot of money. And of course, another downside is maintenance responsibilities. You, as the homeowner, you must handle and pay for all the repairs and maintenance that comes with that house. If there is a snow, you have to, take care of, pushing all the snows out of the driveway, or there's a storm that knocks down the tree. You have to call someone to come and cut it out and cut out the trees and clear all the debris from from your property. So that comes with a lot of costs. And of course, if there's a breakdown in anything, the HVAC system needs repair. Of course, you have to come out, bring out the money to be able to fix that. is a lot of money. That's not even the mortgage itself. These are fees that, or these are costs, additional costs that comes along with owning a property, owning a home. So you have to think about that thoroughly. And then also there is property taxes. Homeowners are responsible for annual property taxes, of course, which it can be, in most cases, be very substantial, so it's something that you have to think about, the property tax of the house. And then sometimes, depending on the type of house you are buying, if you are buying an older house, sometimes you may want to do a remodel or change the countertop or knock a wall down, as the case may be. The cost of remodeling, customizing the house to suit how you like the house, the look and feel, to your taste. So that comes with added cost as well. So you have to take note of that, and to me, that's a downside. At this point, when you look at it, initial cost for maintenance, property taxes. So these are money that is coming out of your pocket that you are responsible for. So in my opinion, that's why I said earlier that I don't think that is an investment, because you are not making money. The only money that you are making on the property is appreciation of the property. As you continue to live in the house, the value of the property appreciates. So that is where, and how do you get the appreciation is until you are ready to sell. So as long as you continue living in that house and you are paying all these expenses, that, to me, is not an investment, because it's taking money out of your bank account. Of course, the fixed costs, there's the comparison, right? So let's go back to the comparison. So fixed cost of your mortgage. So you don't have to worry about your mortgage increasing, except if the type of loan or mortgage that you are on is a variable type of mortgage rate, where the rate changes over time. But if you are on a conventional mortgage, then you don't have to worry about your rate fluctuating or increasing over time. So if you are on a 30 years or 15 years mortgage, fixed mortgage rate, then that is how, if your mortgage is $1,500 or $2,000 a month for the life of the loan, that is the amount you are going to be paying, regardless of the interest rates in the market. But if you are on a variable rate, then that's not going to be the case, because as the market rates fluctuates, that's how they will be adjusting your mortgage rate over time. So you can say that's a plus, or not so much. So of course, another plus here is equity building. So mortgage payments contribute to home equity. So, and that is I would say a form of financial investment. It's a form of, because that is it only becomes a profit for you at the end when you sell that property and you cash out the equity. So that is some plus. How will I put it? That is, just a little plus, I would say. Equity building. Then insurance costs. So homeowners insurance is mandatory, and is becoming more and more expensive than renters insurance. So Yeah, and of course, there's credit requirements. When you are about to buy a house, uh, your credit, you will require a higher credit score to be able to, afford a mortgage out there. So this is these are the few points that I have noted down to share with you guys. So let me know what you think about this in the comment section. So like I said, depending on your situation, your financial situation, run the numbers and see whether renting is a better option for you, or buying is a better option for you. So let me know what you guys think, and about the housing market and what it's going to be like in the future. So thank you very much for staying with me to this point. If you have not subscribed to this channel, please subscribe and support me in growing this channel. And thank you very much, and see you in the next one. Bye.